What is the current state of the Bitcoin network? Well, in this video, I want to dive into really the current state of proposed upgrades, past upgrades, mining, sidechains, the Lightning Network, all kinds of fun stuff, with the intent of really trying to give you a better understanding of where Bitcoin is and where Bitcoin is going. So let's start off with the fact that the base layer of the Bitcoin protocol is more secure and it is more powerful than it has ever been before. Bitcoin recently hit a new peak high of 114.3 million terahashes a second, which is a just mind-boggling amount of computing power securing the network, even though we have taken a slight dip back below 100 million since then. The cost to attack Bitcoin, if it was even possible to secure the necessary equipment to attack Bitcoin, would be unimaginable. We're talking huge amounts of money here to try and attack Bitcoin. Speaking of equipment, the newest generation of 7 nanometer chip-based miners, they are flying off the shelves with absolutely red-hot demand, seeing up to multi-month waits to actually have the physical devices delivered. The new generation of Bitcoin mining machines are on average 4 times more powerful than previous devices, with Bitmain already working on the 5 nanometer chip. 5 nanometers, guys, wow! That will take, of course, Bitcoin mining to the next level once again in terms of efficiency. And mining is growing more and more geographically diverse all of the time. We have had a whole host of stories this year about the starting of or growing of in size of existing mines in places like Texas and Washington and Montana and Quebec and Russia and Iran and Sweden and Paraguay and a whole bunch of other places. China did just reverse the plan to phase out Bitcoin mining in China, though, so it does seem like the Bitcoin industry will continue to have a strong home base in China. Also, just 5 pools currently control 82% of the network's hash rate, an inevitable reality of the economics of Bitcoin mining, and of course of miners wanting to win. Makes sense when you think about it. Joining bigger pools makes you winning more likely. The 18 millionth Bitcoin was recently mined, and the Bitcoin block reward halving, which will drop the block reward all the way down to 6.25 from the current 12.5, is less than 6 months away. Currently, Bitcoin is doing a little more than 300,000 transactions a day on average, with the average fee paid for each of those transactions around 40 to 50 cents. On average, 100,000 Bitcoin a day are moving across the network, which is, of course, transferring a daily value of around $1 billion. Well, that's a lot of money. And that transferring of $1 billion daily, or up to $1 billion daily, that is all happening without having to ask permission, without censorship, without banks, without fiat currency. It's amazing. The total number of Bitcoin holders is also super strong, with the total number of addresses holding more than 1 Bitcoin now at 784,000. And what about Bitcoin's biggest and really most contentious upgrade that we've had so far? SegWit. Well, SegWit adoption is on the rise, albeit slowly. Bitfinex is the latest exchange to announce support for SegWit, and Bitfinex is even rumored to be bringing in Lightning Network support. So there is that. Support, though, still far from universal when it comes to SegWit, with only around 52% of active Bitcoin addresses currently using SegWit. We still have some major exchanges and wallet providers which have not upgraded. But we are getting closer and closer all the time to wider SegWit adoption. But it is kind of crazy that 2 years after the SegWit upgrade, we still do not have universal support for the upgraded addresses, and still 48% of transactions happen using the old addresses. SegWit, in case you forgot, was the upgrade which separated the digital signatures, also known as the witness, from the transaction. Now, this created a fix to several issues with the Bitcoin protocol, and it also allowed for more transactions to be able to fit within a 1 megabyte block. The next big tech advancements being looked at for Bitcoin are called Schnorr. Let me schnorr your question. Schnorr signatures, Schnorr, and Taproot. Schnorr signatures in particular are all the rage in the Bitcoin community at the moment. And it is the biggest proposal since SegWit, actually. Now, the main advantages of Schnorr signatures is its native support for multi-signature or multi-sig, an important innovation since multi-sig is one of the most important mechanisms going, which is easily available for users to be able to protect their account against the theft of their private keys. So, kind of an important thing, right? Now, the current multi-sig technology has got a few problems, which is why the upgrade is important. Problems like the scripting being prone to errors. We look no farther than Ethereum's parity multi-sig for really an example of losing a lot of money. They've suffered from 2 different vulnerabilities, and more than $100 million of Ethereum has been lost as a result. Ouch. Current multi-sig also is inefficient since having multiple explicit signatures bloats the size of the transactions and thus the fees that are associated with making those transactions, and it is less private as well since the current multi-sig setup gives away the fact that the address is a multi-sig address. Schnorr solves all of these problems since Schnorr allows you to aggregate multiple signatures and their corresponding keys into just a single one, thus making Schnorr multi-sig transactions indistinguishable from regular transactions, meaning that it will not impact privacy or transaction size and fees, and it will also move the multi-sig verification to the cryptography layer and not at the scripting layer, thus eliminating the security concerns around scripting bugs, as we've seen, for example, with Ethereum. And Schnorr is required to bring in the next big thing, which is Taproot. Now, Taproot essentially enhances fungibility since it makes all outputs for spending look identical and allows you to make a complicated conditional transaction like a multi-sig transaction look like a normal transaction. Thus, it will homogenize Bitcoin transactions at least in a content perspective. And the result will be that the details of any given Bitcoin transaction, using multi-sig for example, will be that the Bitcoin transaction output will be quite difficult to distinguish as being such by outsiders. Basically, Taproot makes Bitcoin transactions look all exactly the same on the Blockchain Explorer and impossible to tell each from the other. Now look, don't get too excited because Taproot, it doesn't even come close to the high level of privacy that technology like, ZK snarks on Zcash, or, ring signatures and confidential transactions on Monero, or Mimblewimble on Beam. All of that stuff is way more advanced privacy tech. But this is a step in the right direction in terms of making certain transactions on Bitcoin less obvious to spot on chain. Then there is the fabled Lightning Network. So much promise, so much hype. But the Lightning Network, it's a slow burn. Not quite the lightning strike we're hoping for, but it's out there, it's doing its thing. And for, a variety of reasons, it's taken some time. Actually, the number of channels has fallen for the Lightning Network, down from 36,000 to around 27,000 is currently, which is kind of a tough blow for the nascent scaling solution. but far from a death blow by any means. This has resulted in network capacity as well, falling from over 1,000 Bitcoin to just around 800 Bitcoin currently. That's just capacity potential. It's not daily usage, but it really does underline what a far cry it is from the 100,000 Bitcoin a day happening on chain. Liquidity for Lightning Network remains quite low across the network in general. But a new concept by Lightning Labs is aiming to solve the liquidity problems. The project is called Hyperloop. The service will allow users to fill or empty Lightning channels without closing them, thus reducing on-chain fees. A big problem outside of the very low usage of the Lightning Network, of course, has been the incentives model itself. The fees market for the Lightning Network at this point is incredibly immature, and the incentives to provide services to the network, they're just not really there at the moment. Now, if you are just an enthusiast and you want to volunteer your time and your money and your resources and your capital to the network with little prospect of getting a return out of it, go for it. You can support the Lightning Network. Even though the costs are, pretty damn minimal, the potential reward, it's much less significant at this point. There is a very real problem that you might provide really big liquidity to the network, but receive almost nothing in return for doing that, which is crazy because you can, get big returns in a lot of other places, not by providing liquidity to the Lightning Network, but by lending it out or doing something else, or just sitting on it. No risk, or much less risk in that. So as the technology develops, we should see the incentives model moving along with it. Still early days for the Lightning Network, and Lightning still has a lot of promise to shake things up for Bitcoin payments. And a team is even working on a form of offline payments for the Lightning Network called Lightning Rod. Cool name. A new offline style payments protocol which will basically enable people to be able to send payments to users using the Lightning Network even if the mobile node is offline at that time. This is going to be what they describe as something like a Venmo-like experience for the Lightning Network. So that's progress, I suppose. But there are still a lot of kinks to work out with the Lightning Network to see it really take off in any significant way. And then finally, there is the almighty sidechain. So much promise for Bitcoin sidechains. Many Bitcoiners will tell you that Bitcoin sidechains will end all other cryptocurrencies. They've been saying that since 2014, actually, and then all that other stuff happened, and now we have hundreds of different blockchains. So maybe chill out on the we'll end all other cryptocurrencies kind of things. And you know what? It doesn't need to. Bitcoin doesn't have to lift all the heavy weight. Come on, guys. Let some of the other blockchains like Ethereum and Cardano carry some of that load. Bitcoin and Bitcoin sidechains simply do not have to do everything. And ironically, this is very innovation that should sit strangely uneasily with really, really hardcore Bitcoiners, since it means that tokens will start springing up on Bitcoin sidechains and even, of course, on the Lightning Network. Just like they did with Ethereum. And I believe Bitcoiners call tokens like that shitcoins. Can't wait to see their head spins when you start seeing these come to Bitcoin. Anyway, regardless of your opinion of anything that is not Bitcoin, including tokens running on the Bitcoin sidechains, these innovations are indeed happening. Now, anyway, back to the sidechain thing. So Blockstream's Liquid sidechain already has Tether tokens running on top of it. Soon, Kim.com will launch his exciting new project on the Liquid Bitcoin sidechain as well. Now, sidechains came about because adding features directly to Bitcoin is a dangerous proposition, since a lot of value is at risk if the new feature doesn't end up working out as planned, or if there's some kind of malfunction that happens. And it is incredibly difficult to reach any kind of consensus in the Bitcoin community. And of course, that can lead to massive splits, just like we saw with the SegWit upgrade. That's what gave birth to Bitcoin Cash, and then the thing that came after Bitcoin Cash. Now, sidechains sound good in theory since the extended usefulness of Bitcoin is increased, but there are trade-offs to sidechains. Just look at Liquid. It's the prime example of this. Liquid is what is called a federated sidechain. Now, this is where the movement of funds on that federated sidechain is governed by a few companies like Huobi and OKX and Zappo and Bitfinex, but yes, you heard that right. This group of trusted functionaries, they sign new blocks and hold sidechain funds in multi-signature addresses, and they control the ability to withdraw from the sidechain, which means that there are some serious trade-offs here in terms of centralization and censorship resistance. Essentially, you have got to trust that the overlords of the crypto industry will always be honest and always act in your best interest. Fairly certain that is antithetical to the overall idea of Bitcoin. This is, however, just an early iteration of sidechain technology. We will, of course, see better sidechains for Bitcoin in the future. Right now, they certainly leave a lot to be desired, and the harsh truth is that sidechains and Lightning Network currently lack the rich functionality of blockchains like Ethereum. We will be waiting many years for even a fraction of the functionality currently offered by Ethereum and other cryptocurrency blockchains to come to Bitcoin. But all the bells and whistles being built around Bitcoin, they're certainly nice. But it's important to remember that Bitcoin is still the most secure cryptocurrency out there, with the absolute biggest network effect and the absolute biggest amount of infrastructure and of acceptance. Absolutely. Bitcoin is still a crazy honey badger beast, even if some of its technological upgrades move in a very slow way. Anyway, just some Bitcoin updates for you guys. I hope you found this useful. I know we're usually talking about the price of Bitcoin or new merchant adoption and that stuff, but I hope that this gives you a bit of insight into what's going on behind the scenes with Bitcoin anyway. Let me know if you have any comments on this down below in the comments section. Any questions as well. Whatever you guys want to talk about. How's your day going? I hope you guys are having an amazing one. Thank you so much for watching this video. Hit that thumbs up button if you did enjoy it. And of course, subscribe to the channel if you are new around here. Long live the blockchain and peace out. Till next time.